Lawmakers will vote on a new tax plan as early as tomorrow. It cuts taxes for corporations and brings the top tax bracket for the wealthy down. But what does it mean for the middle and lower class?
Here to discuss the new bill is financial planner David Rae. Good to see you again, David.
Great to see you
Always
as
nice
well.
to have you here. Well, tell us who will see the biggest benefit from this tax reform bill.
There's going to be a lot of people who benefit and a lot of people who don't. Ultimately, it depends on where you live, if you own real estate, how much money you make, and how you make that money. If you're going to get a big benefit, the more you make, the bigger the benefit. 80% of the benefits are going to the 1%. So 99% of us are going to get the rest.
Well, that doesn't sound good. Okay, will the bill change our deductions?
There's going to be a lot of changes to deductions. I mean, we're here in California where we have a big mortgage deduction. Currently, you can deduct $1 million of a house, which in most of the country, that seems like a big, expensive mansion, perhaps. Here in LA, it's not so much. So that's going to drop to $750,000. But the good news there is it doesn't affect people that already own their homes. So if you have $1 million mortgage right now or a mortgage bigger than $750,000, it's going to be grandfathered in, so you'll still have the deduction. But it does change state and local tax deductions. So you can only deduct $10,000 of your property taxes or state tax deductions, which for a lot of people, the average person in California paid $18,000 in those deductions who had itemized deductions for it.
Sounds like California gets hit kind of hard, do you think?
You know, realistically, if this were a Christmas present, someone told Santa that California was naughty. We're getting a bag of coal. This really hits Californians from real estate to state and local tax deductions. In 2015, if we took the current tax laws, it would cost us $60 billion in tax deductions just from 1 year alone. And it's going to actually be higher now that real estate values are higher. So people that make good incomes here in California own real estate. It's going to be very tough, and it can be thousands of dollars in bigger taxes. So be proactive and really look for ways to minimize your tax bills going forward.
Oh, wow, that's good to know. Now, wildfires have destroyed hundreds of local homes in recent weeks. Will the new bill affect the victims of disaster, and in what ways?
Here's another way that it sort of just seems like you're screwing California. We have all these fires, we have all these people who've lost their homes. And the new bill from 2018, if these fires happened in 2018, you wouldn't be able to deduct your losses. So you've lost your house, it's burned down, all your stuff's gone. Currently, you can deduct your losses above 10% of your income. If that plan goes into effect as it's written now, no deductions. And there were some exceptions put in for things like hurricanes and tornadoes and flooding.
But not fires.
Not fires.
And
so, you know, when you kind of look at it and feeling like bad for California, you just go, oh my gosh, it's crazy.
That is a bad year. So we all need to prepare and figure out what we can do to keep our deductions at a maximum, right?
There are, and there's a lot of things that there are loopholes here. Let's be honest. There's a reason 80% is going to the 1% or people that are close to 1%. If you make self-employed income, there's a lot of ways to deduct things, and just being proactive so you aren't surprised when you file your taxes in 2019. There's a lot of confusion here, so take a look at what it means for your situation. Look at your taxes for maybe last year or the coming year and see how this will really affect you so you don't get surprised the following year and go, oh my gosh, I owe $30,000 in taxes.
Ouch.
Crap.
And maybe to visit your accountant.
Yes, visit your accountant and your financial planner, and you just be proactive so you're not surprised.
All right, well, thank you so much, David,
Thank
and
you.
happy holidays to
Happy
you.
to you.
And for more information on financial planning, you can check out David's website. That's financialplannerla.com. I bet you're going to be pretty busy in the next few weeks.
It's going to be a busy end of year.
Oh, yeah.
Thanks again. Thanks again for joining us.